Welcome back. 450 points higher now on the Sensex, 146 on the Nifty. It's been a big move. HDFC really is the one which has led the last hour move. And even the rest of the financials are joining in fact. But HDFC stands out. Infosys, of course, that was the morning thought process as well. Perhaps would be one of the stocks of the day. And that is the case, 3.5% higher. Reliance has done well. In fact, even TCS has joined Infosys now in the party. Perhaps TCS might have now overtaken Infosys as well in terms of contribution as well. But it's clearly gaining ground now. Zee Entertainment is higher ahead of numbers. So things looking quite good. In fact, on the Nifty now, there are 44 gaining stocks, only 6 losing stocks. So it's been a good day for the market today. Ashwani and Mitesh with us for BTST calls. Ashwani, you go first.
See, for a change, I am moving my instrument from Bank Nifty to Nifty because that is where I think more momentum is there. So carrying home 10,900 calls, and on individual stocks, Balrampur Chini is a buy with a stop of 109, target of 117. Equitas is a buy with a stop of 119, target of 130. And Bajaj Finserv is a buy with a stop of 6150, target of 6300.
Lots of buys on Ashwini's radar. Bajaj Finserv soaring away. Actually, Bajaj Finance also is doing so well today. Mitesh, the bulls are liking this afternoon. What are your bets?
Yeah, in fact, I have 2 BTST calls as well. I think Bharat Forge would be a BTST with a stop at 483 for targets of 500. And Britannia is a BTST with a stop below 31.35. Look for targets close to about 32.10.
So Anuj, I just went back to the candlestick chart just to see what we've done is we've at least taken what was happening was we were making lower highs last couple of times. So at least we've taken out the previous time we were at this zone, 10,870. Now the next is whether we can go above 10,920. That's 1st January high. But that Lakshman Rekha, this 10,950 kind of a Lakshman Rekha. What sense looking at this momentum now?
Let's wait for the market's verdict. The point is that if you're buying now, you're again, look, I mean, at some point this range will break. It won't, last forever. But, you just like you went to the lower end of the range and you sort of found support there, it's a good chance that, when you move to the higher end of the range, 10,900 to 950, you'll perhaps once again, see some kind of congestion. So the time to buy was yesterday when the market was moving to the low point of that range. Now you're ending so close to the high point of the range. Right now the Dow futures are up. You're pricing in a good environment. It's possible that tomorrow morning also you have a bit of a gap up, but which will again take you in that zone. I think that's not the way to approach it. You want to either buy lower or now you want to wait for market confirmation whether this time the range is being taken out or not. Whether this is a real thing or not. Risk reward wise, I mean, if you miss the rally and if you're buying now, I think you're taking a huge risk.
Okay, well, on that note, let's focus on some more numbers and earnings that have trickled in today. TV18 Broadcast reported a revenue growth of 22% and EBITDA growth of 41% on a year-on-year basis, while Network 18 reported revenue growth of 20% and EBITDA growth of 18% in the same period. Just the caveat, these are the companies that run and operate the network, the channel that you're watching. Lata caught up with Rahul Joshi, Managing Director of TV18 and Network 18, as well as Sudhanshu Vats, MD of Viacom 18, to get more details into the quarter gone by. She began asking the gentleman about the jump in the operational performance in the third quarter.
I think if you look at this quarter, it has been a very healthy growth of 22% in our overall revenue. I think, there has been a healthy percentage jump in EBITDA as well. I think, on the back of robust advertising in the festive season, we've been able to grow our revenues in a good way. I think we've also been able to reduce our losses considerably, and that's led to a fairly positive EBITDA. I think if you look at the overall news picture, we are the #1 news broadcaster in the country with 11.4% share. That's almost a 2% lead over our nearest rival. So we've only widened our lead over the #2 player, and we are way ahead of others. So we are established #1 news broadcaster in the country now for a very, very long time. And some of the advantages are now being seen there.
Okay. As you said, the reduction of losses in the regional news channels has helped a goodish bit. In fact, I think the losses have fallen from 29 crore to about 9 crore.
That is right.
Is there a chance of it getting into the black there?
Oh yes, absolutely. Next year we remain reasonably confident that it will be in the black. I think over the last 3-4 quarters, if you see, we've been reducing our losses 70% on the trot. And I think backed by an aggressive revenue growth of almost 30-odd%. Last quarter we grew 37%. This quarter we've grown 27%. And I think finally the losses are reducing. And I think that any revenue jump in going forward would fall to the bottom line. So I think we are very happy about our regional news performance. It's really turned around, and it's likely to hit the black very soon.
Well, I want to ask both of you about future revenues as well, especially because it's going to be not just one budget, but 2 budgets as well, election season. But I'll come to the outlook in just a bit. Sudhanshu, a more operational question. This unbundling rule by TRAI, you think that will allow us to keep the subscription at 13% growth? Will there be any problem?
So, Lata, the new tariff order which TRAI has come out with, in the long term is good. I think it's good for the industry, it's good for the consumer, it gives choice to the consumer and all that. But I think in the implementation phase, and I think this quarter particularly, and maybe it might take a couple quarters in my opinion, there will be some level of, that disturbances, I could say, or settling down or teething problems, and that could have some headwinds. Okay. I think both for subscription, and we could even see it if there is disturbances and in the period in which it's getting implemented, we could see some headwinds on advertising as well. So I think the settling down period will have some headwinds.
It's some advantage that it is coming at a time when news will be sought, like for instance elections and budget, and of course mother of all elections. But Sudhanshu, I want to come more to the entertainment part. It's the entertainment business revenues have grown by 23%. How much of it came from Andhadhun? I mean, I like the movie.
No, Andhadhun was a blockbuster, Lata, and I'm glad that you saw it, and there are so many people who liked it. And I also wanted to let you know that IMDb rated it as the best film of 2018, but more importantly, it is the 10th best film ever. So which we are very, very delighted. It's done very good business. It was a small film, so profitability has been very high, but absolute profits not as compared to some of the bigger films. I think what has helped our revenue growth this quarter is, I think, one, the festive season and the ads, as Rahul was also talking about. We also had 2 of our tentpole properties. So Big Boss was there and Got Talent was there. And more importantly, films in general. And you spoke about Andhadhun, but we opened our account in Telugu as well with a film called Devdas, which did quite well. And so 3 or 4 films which we released in this quarter all did very well. So that gave us the robust 23% growth in revenue. Our EBITDA as well, despite all our investments, continued to grow. Our EBITDA on business as usual in this period has nearly doubled. So I think that's been a...
Yeah, I agree. Business as usual, EBITDA has done well. I think it was more because of the loss on Colors Tamil and the newly launched channels.
We've launched 3 channels, Lata. So Colors Tamil is an investment which is continuing, which was launched earlier. But we also introduced Colors Kannada Cinema, which is a movie channel in Kannada. And towards the end of the quarter, we introduced Colors Gujarati Cinema, which is our entry into Gujarat. So
those are investments. Okay, would that explain this? You know, if I looked at the consolidated numbers, the income growth, I'm not going YOY because it's not very comparable, but if you go quarter on quarter, the income is fairly good. It's gone from 120 crore to 146 crore. But expenses also have gone up almost similarly, and that's largely operational costs. So what would that be? Is it channels?
It's the new channels which we've launched. It's the investment in content which we are continuously making, and it's also the movies which we did in this period. So I think overall, broadly, it's investment in content which we are continuing to do.
Okay, Rahul, to come back to you on outlook. You know, we are counting on a fairly important set of events for the news guys. Do you think it'll generate revenue, subscription?
Yes, I think, if you look at this quarter and the first quarter of next financial year, I think elections will really play a big role for the news business. And even though Sudhanshu talked about the softness that we are witnessing in January and probably also in the next 1 or 2 months, thanks to the new tariff, implementation of the new tariff order, I think this one event will help us in the last quarter of this financial and the first quarter of next. Government revenue is up across the board thanks to our regional channels doing very well, aided and abetted by, in some measure, the elections, the last 3 state elections and now the general elections. I think there will be ancillary activity around elections. Political parties will advertise. We will do some tentpole properties, events, IP. So all that would add to some amount of robustness in the revenue in this last quarter of this financial and in the first quarter of next.
Does it usually drive digital revenues?
It also does drive digital revenues. Maybe more in the case of broadcast, less in digital, but it does have a salutary impact on digital as well. Oh. And don't forget that, while we will take a little bit of a hit in this quarter because of vote on account, not a full budget, but next year we will have 2 full budgets, not 1. So that is good news for the next year as well. Okay. So if economy, and you would know better, if economy does well, markets behave, I think we would see some amount of buoyancy in advertising going forward.
I just spoke to a conference of paint industry guys. In fact, even other industry, other than autos, almost everyone speaking about fairly good demand. So,
that's right.
Hopefully it should translate. I mean, you can feel it in advertising, no?
I do think, that this quarter has been, the last quarter has been good. This quarter also would have been decent, again now because of this new tariff order.
Unbundling.
The first one, unbundling 1 or 2 months may be a little uncertain. But we do feel that the economy is robust and I don't see any reason why it should not do well in the next couple of quarters.
Okay. Fingers crossed, but I just have to ask you a last question. Anything else like Andhadhun on the anvil? What should we... So more as a viewer, I'm asking you.
Two things. One is on the digital piece. So our the Voot app continues to do really well. And I think there are 2-3 things I wanted to let you know about that. Our daily views now on Voot are crossing 25 million plus. So we are getting a substantial scale, particularly for an ad-led video on video platform. That's wonderful. By the way, all news channels are there on Voot as well. Yes, so I think you should sort of enjoy them. And lastly, on Voot, the good thing which has happened is that in our last 2 years, our reliance on our tentpole was very high, which was, let's say, a Big Boss. This year around, our reliance, we are getting a more holistic, views, which is very good. So therefore, regional is picking up, Mofsil India is watching, different things are being watched, and so on and so forth. So that's really good news. On Voot, we are launching we are in beta for a product on Voot Kids, which is something which all the parents who have young children should look forward to. It's a brilliant product.
I'm not so sure of that. But in any case, what about any movie? I mean, any blockbuster that you want to share or keep a secret?
No, we don't have any. So we have Thackeray coming up, actually. Okay. Thackeray is on
so that will reflect in this quarter?
Yeah, that Thackeray is on, which is basically, so Nawazuddin Siddiqui in and as
both
Thackeray.
The Hindi and the Marathi?
Yes. This is the first time in recent history when Hindi and Marathi is launching at the same time.
Okay, I'm sure that would be elicit a lot of interest, and then, of course, whether it does well will depend on the movie itself. Okay, Rahul, Sudhanshu, thank you very much, and all the very best to all of us, actually, for this quarter.
Thank you.
Welcome back. This is a CNBC TV18 exclusive. Sources say that a resolution plan is likely to be finalized as early as this week for Jet Airways. We are learning from sources that Naresh Goyal is likely to step down from the board of the airline and give up majority control. And this is what, of course, has been keeping the stock pretty excited over the last 1 or 2 sessions. Ritu is keeping her ear close to the ground in this story. What is the latest, Ritu?
Well, the latest actually, Surbhi, is that the lenders have decided to meet as early as tomorrow to sign on the dotted line when it comes to the final resolution plan for Jet Airways, which, Etihad, Jet Airways, as well as Naresh Goyal, the current promoter, have been in talks with the lenders for the past couple of months. Now, we understand, as per the current resolution plan that has to be now agreed upon by all the lenders, part of that 8,000 crore rupees of debt that Jet Airways is sitting on will be converted into equity, which will then be held by SBI and the rest of the consortium. In addition, we understand that Naresh Goyal has been asked to step down from the board, and in his place, Nivan Goyal, that is his son, will be inducted into the board of Jet Airways. But after this restructuring exercise is completed, Naresh Goyal's stake and even his son's, that is when he replaces him, will fall to almost half of what he currently owns at 51%. So it'll fall to about 26% is what we're given to understand, and voting rights will also be capped at 10% for the Goyals. So this is broadly the contours under which the plans are being worked. But of course, the big deal is that Etihad is coming to the rescue. They're likely to bring in more funds, which will see their stake rising from 24% to slightly higher. Do remember, under FDI and aviation, they can take it up to 49%. Of course, the final stake will depend on the kind of capital that Etihad is able to bring in.
Okay, Ritu, thanks very much for that. That's a solid profit number from Zee. 562 crores is what the company has done. domestic advertising revenue growth of 20%. That is what they have declared. So 20% ad revenue growth. This seems to be slightly higher from the expectations, about 15 to 17 odd percent. Subscription growth of 28%. Okay, these numbers do look pretty strong from Zee, and we did see the stock actually do a bit of a reversal, and it started rising higher just towards the closing minutes of trade. So these numbers look quite decent on both the subscription growth, which is 28.6%, and the advertising revenue growth is 20.6%. EBITDA growth of almost 27%. These are some of the key numbers. The EBITDA margin, as per the company's calculation, is 34.8%. So that is the calculated margin as per the company. So there's margin expansion and growth both on subscription as well as advertising seems quite decent. Manglam has more.
Absolutely. Surbhi, as far as the advertising revenue growth is concerned, the street was working with a number of anywhere between 15 to 17%. So it's a positive move out there. Subscription revenue, that has been the big outperformer here. We were working with a number of anywhere between 16 to 18%. The company has gone ahead and posted a growth of 28%. And that is what has led to the EBITDA beat also, which is coming at around 750 odd crores. This compares with our poll of 712 crores. And the margins, we were working with a number of 33.6, 33.7%. The company has gone ahead and posted EBITDA margins of 34.8%. All round top-down beat as far as Zee is concerned. The stock was higher in today's trading session, but I haven't found in the press release any commentary with regards to the update on the promoter's impending stake sale or some sort of granular details on ZEE5 as far as how much are they going to invest in that business going forward. So those are a couple of things that the street will be watching out for. Perhaps those would also be the questions that analysts would have on the conference call, which starts at around 5 today. But as of now, from the reported numbers that there are, in particular, the subscription growth, ad growth, of course, is better than expectations. This is something that the company has been doing in the recent past as well, where they beat analyst expectations as far as ad growth is concerned. But subscription growth of 28% is something that has also led the margins higher, and we're getting a top-down beat as far as the reported numbers are concerned.
Super performance by Zee. Thanks for that. The only problem is, while Mr. Chandra is talking about the macro environment, Mr. Chandra, we want to know what you're doing with the company and what really is happening with that stake sale. And absolutely no intimation in the press release. I don't know why companies do this. Why say something and not really come through on it and give clarity to the market? We don't have that, at least in the press release.
During the quarter, there was a brokerage downgrade that came in on Zee, and they said that if at all there is a no-deal announcement that happens, perhaps the street might not like that as well. So those are a couple of things that analysts will definitely question the company with regards to that, because that was the biggest development that took place on Zee in the previous quarter.
It promises to be an interesting analyst call for sure. Yeah. We do have some reactions, I think, coming in as well. Ashwin Patil of LKP Securities is joining in. Ashwin, no complaints with the numbers?
Absolutely fantastic set of numbers coming from Zee stable this time. The ad revenues beat, which is at about 21%. We thought that it would come around 17 to 18%. But on the subscription revenues, I should like to mention that last year, same quarter, there was a dip of about 15% on the subscription revenues. And on that lower base, as well as the company, whatever they are doing good on the subscription side, like digitization, which is happening in the southern markets of Tamil Nadu, etc., where the company has, has gained a good market share. That is also helping them on the subscription side, I guess. And also, the low base of last year, that has helped them to put a 28.6% growth on the domestic subscription business. We were going around with a number close to about 20%, but this is a beat, I think, because of the low base of last year as well.
Ashwin, what does one do with the stock in a situation like this, where on the one hand you have numbers which have beat expectations, on the one hand you have a stock which has corrected from the top, currently trading at lower valuations than it was, say, about a year ago, but then you have the impending promoter stake sale. Then you also have, investments uncertain in an OTT business for which there is not much visibility in terms of how big or how not big it can be. So a slew of uncertainty vis-a-vis great performance that has come by and attractive valuations. What do you do? Measuring the pros and cons of the company, I think that, the company is trying to, get into global markets while allowing the other company, the stake buyer, to enter into the Indian markets. And, Zee would be gaining a good exposure to the global markets as well. And, definitely there is some sort of
lack of clarity on what the company is going to do, and also on the OTT front. But OTT is an upcoming market, and over there, even Zee would be gaining their own, footprint over there. And just like other companies, how they are doing, they will be investing and gaining their own presence as well over there, being the number one company right now on the media front in India. Definitely, they have their own plans, and looking at the set of numbers that the company has come up with, I think I would be going up, with a buy rating. I would continue my buy rating on this stock. Now, the target and all, I have to, revisit the numbers after this result.
All right, fair point, Ashwin. Thanks a lot for joining in with that quick take on Zee. So in case you've just joined us, we had numbers coming in from Zee Entertainment. Looks like a top-down beat as far as revenue is concerned. Ad revenue growth of 20.6%, above our poll of 15 to 17%. Domestic revenue growth on a low base spikes 28.6%. We were working with a number of anywhere between 16 to 18% out there as well. The company's EBITDA, 750 odd crores. This compares with our poll of 712 crores, so above expectations. And the net profit on the back of a beat on the top line, as well as operations above our expectations as well. 50.3% growth on the bottom line. However, if you adjust for exceptionals in the prior comparable quarter to the tune of 42 crores, the percentage growth would look slightly difficult or slightly lower than the optical 50% growth. However, no complaints as far as the numbers are concerned. All eyes now, or all ears now, on the company's conference call and management commentary.
Welcome back, and let's shift focus on a CNBC TV18 exclusive where Yash Jain caught up with Vijay Kumar, who is MD and CEO of NCDEX. And Yash began by asking him on his views on equity exchanges being allowed to start commodity trading and what impact has it had on the commodity space, especially NCDEX.
First thing is that NCDEX has been in the commodities business for over 14 years, so that's a long track record, and the other exchanges are just starting up. And our experience goes deep in the sense we understand commodities. We have handled deliveries across agricultural commodities, which are perishable products, so there's all the more difficult. Right. And we've handled about 100 lakh tons of delivery over the last 14 years. So there is a lot of, it's not just about trading and trading systems, it's about creating this ecosystem of warehousing and the trust in how the product is handled. And it's good that other exchanges are coming in, because at a generic level, the commodity markets need possibly, or have space for other players as well to come in with new products and build it, and that's always a welcome thing. Competition helps us also become sort of sharper, stronger, help the customer service go more to a higher level.
Right. Now, of course, it's about two exchanges which have entered commodity trading, NSE and BSE. As these two exchanges spend more time on this turf, they scale up their commodity trading business. How rapidly would this lead to a transfer of market share when it comes to the incumbent players? What's your sense in terms of just the market dynamic when two new players, such big players in equity space, come into the commodity market?
Yeah, actually, I mean, the nature of most of these derivative markets is there is a lot of stickiness. Liquidity doesn't shift very easily. We've also tried in the past to switch liquidity from the other exchange. It's just doesn't happen. We've had other strong exchanges being set up earlier, like ACE, which haven't made a dent and have had to close. So, and they came with strong parentage as well. So I think what instead of shifting of market share, I think what might happen is that they may focus on another set of products, or another set of underlying products, commodities, on which they build. So ICEX, for example, has worked on some of them, which we don't trade. So that's, I mean, if these large exchanges focus on those, I'm sure they will find some success. Yeah,
absolutely.
All right, that's the NCDEX MD saying that the stickiness continues, and even as the new exchanges have come in with commodities, it hasn't really taken away any market share from the existing exchanges. So now is Ross Stranchan, who's senior commodities economist at Capital Economics, and he joins us on a London phone line. Ross, hi, thank you so much for taking time out for us. What is that you're picking up from the global markets right now? Because while of course it has been quite volatile, and what really seems to be supporting metals right now in the very near term is expectation of further stimulus measures from China. How long do you think that can be supportive for the metal prices?
I think that will prove to be short-lived. I think the market's move today has proven to be uncharacteristically bullish, and they've taken the news and statements out of the Finance Ministry and NDRC in China to indicate significant support for the base metals markets. But I think what we'll see is that while these attempts to provide reassurance will provide stimulus in the long run, what you'll only start to see is this feeding through into commodity markets in the second half of the year. And so we're actually still expecting the prices of base metals to fall significantly lower over the next 6 to 12 months.
So, Ross, would you say that it really needs a longer-term settlement between US and China, or we actually need to see the actual demand pick up on ground before the metal prices can really hold the higher levels?
I mean, I think it's partly a matter of timing. I mean, obviously, if there was what appeared to be a definitive deal between China and the US, that would be supportive for some days and weeks. However, even a deal that appeared to be definitive could well hit bumps in the road with some of the uncertain policy and changing policy that has emanated out of the US. A more sustained increase in prices is going to see an upturn in demand globally, and we're not expecting that until 2020.
So, Ross, what is your sense then? Is it going to be the macro driving many of these metal prices, or do you think the supply-demand concerns, or some of these metals actually face a bit of a deficit as well in 2019? Do you see that as a supportive factor at all?
I do see it as a supportive factor for some individual metals, at least for relative outperformance. For example, copper we think will remain very well supported and may in fact rise slightly. Not least of which because of the limited amount of new supply that's going to come on stream in the copper market at a time when there are cuts elsewhere. However, overall, the bigger picture is the fact that you've got this significant drag of slower global growth in China. You'll see it in the US and what we're seeing here in the Eurozone and elsewhere in Europe will really mean that prices still have further to fall.
All right, Ross, to get your point. Thank you so much for joining us today. So that really is the view coming in from Capital Economics, that the prices for metals are expected to be under pressure, and it would be only by 2020 that you would see the metal prices actually seeing some gain as we go forward into those years. But with that, that's all the time that we have on this show. Thank you so much for watching.